Hey there, my name is Mike Munzing with Munzing Mortgage Group. It's time for another market update video, and a lot of things have been going on since I was here last, a couple of weeks ago. Rates over the last week have been really getting hammered. End of last week, they got hit pretty hard. We had Memorial Day weekend. We came back on Tuesday and the markets just fell apart again. The good news is Wednesday they sort of bottomed out and we've had a little bit of a recovery. But as we take a look at the rate sheet here, which is over on my website at www.mikemunzing.com, you want to take note, rates at this point are up about 0.25%. They at one point had hit about a 0.5% jump. I've often said that we are going to be at one point seeing a fairly large jump in rates because of the fact they have been artificially held down. The Treasury, the Feds, have been printing money with almost no end in sight at this point so they can buy their own Treasuries. So the Fed prints money, buying the Treasury bonds, buying these rates low. It is artificial. That's what's been keeping these rates so low over the long term. The laws of economics do not end on our shores, as I often say. So at one point, there may be hell to pay, you might say. There may be a big jump in the rates, but at this point, I think they're going to continue pushing this. We just saw a blip. What that does tell you, and one thing I would like to encourage you to do, is look through your clientele base. Make sure everybody's in a good rate. If they need to refinance, I've had some great leads from my friends in the real estate industry in hopes of helping your clients, your past seller or buyers, because they need to refinance to get that lowest rate possible. We're still well into the threes, and it's time to really lock them into something long term, get them into a 30-year fixed rate so the fluctuations in the future markets won't hurt them. Just a reminder, give me a call if they need to refinance for that as well. Now that being said, let's see what Stephen Thomas is seeing this week. And it is rather interesting. He's really making a focus this week, and he is over once again at www.reportsonhousing.com. You definitely want to try to subscribe to that. It is a great source for information, but what he is looking at in his report this week is that foreclosures and short sales are now only 4% of the current listings on the market. All the way back in February of 2012, almost a year and a half ago, that distressed market was 47% of the actual closed sales, and that broke down as 29% short sales and 18% foreclosures. Once again, almost a year and a half ago. Since that time, that's changed drastically. As of today, as far as closed sales, the distressed sales are 15%, and that is 11% short sales and only 4% foreclosed properties. Now, once again, we've shifted towards traditional sellers, equity sellers, and is going to a little bit more of a traditional market, at least it appears that way. And now he makes the comment that since that time, we've really chipped away at the inventories on the distressed side. And that is not always, I don't 100% agree with that. We had a discussion this afternoon about that. My take is that the banks have been leaning a little bit away from the short sales. They're a little bit harder to do. And the government, the state government, has really pushed away from the foreclosures. They're stopping the banks from foreclosing. They've got the moratoriums. That does make it tougher. So is it really a push away from the distressed sales? Have we sold that inventory? Well, we're still, and we'll show you shortly, we're still only at less than 4,000 available homes. Where would we be if the banks were actually trying to get those foreclosures back on the market or actually foreclosing on those who are underwater? As for the actual, once again, the inventory, we are now continuing to see a nice little rise there. Another 123 homes have come on the market increased on the market over the last 2 weeks. That puts us at 3,899 homes. Once again, when I talked to Stephen today, this report was out a few days ago. As for today, we are within 3 or 4 listings of getting us back over that 4,000 home mark. That is fantastic. That brings us to the actual demand for properties. And that is still kind of hard to see. We've increased a few properties, a few, as he considers it, those are in escrow. So we've increased just a bit to 3,056 homes that are currently pending in escrow. Once again, the actual demand is coming from a lot of investors coming in with all cash buying homes. You've got a little less of the first-time home buyers, but you've got a little bit of a mix there. A lot of the traditional buyers, those who were able to sell their home and buy a new home, that's been a pretty tight end of the market. And my next report will shed a little bit of light on that. Now, to give you just a little bit clearer perspective, I often remark on Mark Hansen's information, often known as Mr. Mortgage. He's not a bright and cheery guy when he talks about the market, but what he does point out, he's been talking about what's called zombified, or a type of homeowner who's stuck in their home. Traditionally, those who buy a home, they get into either credit issues or income issues and get stuck into a home. He calls them zombies. They can't get out of the home. But what he points out here is something that he's been talking about that, but now is verified by Zillow, because Zillow came out with a report, and this is the Zillow report that Mark's commenting on, that 44% of the United States homeowners with mortgages are now what he considers an 80% mark of loan to value. The loan is now 80% of the value. And the reason he looks at the 80% is if that homeowner can sell that home with the closing costs and have enough to roll it up into maybe a little bit larger home or another home. If they don't have that 20% equity, it makes it really tough. So it's a lower number who are 100% underwater at 100%, but if you take into account an 80%, which will allow them to sell that home, pay the closing costs, and have us sell them another home, that's at 44%. And then if you add on those who or possibly have income or credit issues, that makes the current homes with mortgages down about 60% who cannot do anything or cannot move forward on trying to find another home. A couple of minutes ago, I told you that was the traditional sell their home, buy a new home, traditional move-up buyer. That is what's making it really tough. So you got Mark Hansen commenting on that, and is now backed up by Zillow, which kind of gave him some support on that. I know that's not great information to hear, but hey, it's reality. I want you to know what I'm seeing out there. It is still a great market with the low rates, with buyers who can buy are still out there shopping for homes. The demand is still out there. Let's hope that these rates remain low for at least some time to come and help us get some great homes sold. I am here for you. I'm here for your buyers. I'm looking forward to working with you and getting them fantastic rates. I am approved with a whole broad number of investors who have fantastic wholesale rates that I can provide for your buyers. So give me a call anytime, 949-689-5626. Don't forget to look up my online application to send them that as well. Weekends, days, nights. I'm always watching for those to come over and get them going quickly for you. So let's have a great weekend. Look forward to hearing from you. Call me anytime once again. God bless you. God bless your families. God bless this beautiful country. We'll talk soon. Bye-bye.